Welcome traders to this video from Admiral Markets, where we're going to take a look at the currency markets and our usual currency pairs, such as, for instance, the euro dollar, pound dollar, dollar yen, AUDUSD. We'll also give a heads up of the webinars in February, but first of all though, the risk disclaimer explaining that the online materials developed by Admiral Markets Estonia. Please take into consideration that the info is just may not be suitable for everyone, and to get the corresponding info on charting conditions and any other detail, please take a look at admiralmarketsglobal.com. Also, the risk disclaimer, of course, explaining that trading foreign exchange is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that, and this webinar is for educational purposes only. Please pause the video to read the entire disclaimer, and we do thank you for your attention. First of all, I want to take a look at the videos of this week, the webinars of this week. In fact, we got 17th of February today, weekly Forex recap with Tarantula as always. Then Tuesday, Wednesday, Thursday, we have live trading lab webinars, range trading, price action at support and resistance, and Fibonacci wave trading. And of course, our special webinars, the Pro Learning Labs this week, Thursday, 2014 Chaos Trading, and the other webinars you can see in the list as well. Let's start with the euro dollar. As always, on this weekly chart, we can see a gap between the 61.8 and the 78.6 Fibonacci retracement levels of this entire downside from the weekly perspective. But first of all, we do need a break of the 61.8 here and the trend line that actually is in capturing resistance. As we can see here, support is also clearly established with this green line, so let's see if this is a bounce or break spot. At the moment though, if we look at price action, it is bullish with two bullish weekly candles in a row, so we could see this week some upside continuation maybe to retest these tops, and then the question is, will those resistances break for the upside breakout, or will they bounce to the downside? This is the daily chart. We can see that we're approaching a daily top right now, so we have to be careful for that level. Once that level is broken, there could be some continuation left before we bump into that bigger resistance. This is the pound dollar. The pound is in fact more interesting than the euro because of its massive upside continuation, its breakouts to the upside continuously in fact. So the pound dollar, amongst others, and other pound currency pairs crosses are very interesting at the moment. If we look at the monthly chart, we can see, for instance, that this particular resistance at about 167.30 has indeed been broken already on this early Monday morning, and that means, or potentially means, some upside continuation to fulfill this wedge. If we look at the very first move up here, this could have been the first actual move up with this as a triangle like that, or at least a correction, and we're getting the breakout to the upside. 180 could be the target for the pound dollar in the very long term. This is the weekly perspective, and here we see basically a very strong impulse followed by a bull flag, of course, the break of the weekly resistance, hook back and continue, now pushing through the big resistance of the monthly chart. So this is looking bullish, and we can see the next target, we stopped at the minus 272 at 166.57. The next minus 618 target is at 171.59. This is the daily perspective where you can see that bigger bull flag here. Before we continued, let's zoom into this continuation part, and we'll see that we broke recently here at the end of last year, of course, with a lot of actually choppiness followed by it. But most recently, we got a very good bounce at the 50 fib of that breakout of the weekly resistance here. You see 50 fib. So we're heading towards that target. The first minus 272 target is at 169-ish, roughly speaking, and then both minus 618 targets are at the 171.70, and there's a nice confluence. So we can expect maybe some small upside, but then we could hit that target, make some bull flag, and the next break would be a good break up to that minus 618 target. AUDUSD had yet another bullish week actually last week, third in a row, but now still very close to that resistance on the weekly chart and the 38.2 fib. It's also January's high. That level is at 90.80. If price does not break that level, we have a potential for the currency to make a bounce back to test the bottom. If it does, there's a potential for price to move up to the 50 fib at 92. This is the dollar yen. Of course, here we had a tremendous impulse followed by the triangle and break of the triangle. This could have been the hook back that we were speaking about longer than now. And we can see that there was a pin bar when we zoom in to the break and pullback. At the pullback, we have a weekly pin bar, in fact, with a pretty decent wick at the bottom at the 50 fib. So that was a reason for the analysis to judge that there could be some upside continuation. And but we haven't seen that so far at the moment. Still could happen this week. Last week we just retraced the pin bar, in fact, which means that we could still use that wick as a support level. That is around 101, I think, the low of that candle, 101, 1070 in fact, and that could still be a support level from our upside. If we do get the bounce up at this area, we could see upside continuation to test the targets at 107.90, 107.70, up to 111 even. If we don't, then the next bouncing area would be the 61.8 at 100. If that doesn't provide bouncing support levels, then the next invalidation level will be about 99. If that 99 level gets broken, then the dollar yen is certainly not looking bullish anymore. Till that level gets broken, this could still be a hook back. The pin bar could still be a bouncing spot for that upside continuation. One level to keep an eye on is on the daily chart, the top. The top here at 102.70. If the top gets broken, there's a bigger chance for the price to indeed move up to those targets that we've mentioned so far. So that would be a good indication. That summarizes the outlook and video of today. We'll be back next week on the 24th of February, on Monday again. And make sure, of course, to take a look at Admiral Markets in the social media and our webinars. Thank you so much for your attention and wish you all a great trading week. Cheers.